Okay, today we'll talk about non-cash transactions. So going back to what we studied so far, we first choose a system and then build chart of accounts and record the transactions, review, reconcile, and generate the report. When it comes to bookkeeping, we had how bookkeeping work in general in the last session. In this session, we want to emphasize that there are transactions that are cash and others non-cash. So the cash is straightforward. Whatever cash is related in the transaction, it will be recorded. But non-cash is something new, and I think it's good to keep in mind about. So what you will learn from this: what are the non-cash transactions, why do they matter, and how software record them. Okay, so you may tell me, why do I need to care about a non-cash transaction? So here is an example. Let's say you bought a car. You bought it for $20,000. You are happy with it. Before buying the car, you had the $20,000 and your net worth was $20,000. After you bought the car, as soon as you take it out of the showroom, nobody will buy it from you for $20,000. They will say we'll buy it directly from the showroom. So the price goes down. So if somebody asks you before buying the car, what is your net worth? You will say it was $20,000. And then after buying the car, your net worth went down. Let's say in this example, $18,000. This is the concept in theory. They call it depreciation. The price depreciate of the car. Another example, buying on credit. Let's say you bought supply for the coffee shop they want to open and it was worth $2,000 and it was on credit. So basically you didn't pay any cash. You still have your cash and you have the inventory as well. So in reality the business didn't lose cash, but it have equipment in there. So this transaction has no cash in it, but it influenced the performance of your business because now you have supply. You can make income out of it without using your cash. And finally, let's go for a last example. Let's say you lend money to your friend. So you give him cash. Now your business has less cash. Let's say you give him $1,000. But then you realize your friend will not pay it back. So in this case, this $1,000 is actually now gone from your business or gone from your accounting. Ideally, non-cash transactions always influence the wealth of the business or even the person. Here is just to give contrast. So let's say if you bought a car, the car price will go down. Let's say if you bought machinery also will go down. When you bought on credit, also you can buy from suppliers. If your friend don't pay, customer also may not pay if there is debt on them. I think you get the picture, right? That these type of transactions actually influence the performance and the worth of the business. Here is some theory of the common non-cash transaction. So we have credit sales and credit purchases. We discussed this earlier. Anything on credit, which is either you haven't paid for yet or the customer didn't pay for yet, is a non-cash transaction. There are accrued expenses and accrued income. Basically, it is expense that you haven't paid yet or income that you haven't received yet. The difference between this and credit sales or credit purchase, let's say you have a subscription for Netflix. So when you subscribe for Netflix, you pay I don't know how much, to be honest, $10 or whatever the amount is. You pay that every month. So as a person, you know that this is your monthly cost. So you can accrue this expense. You can record this transaction because it's impacting your wealth and you know you will pay it even if you still didn't pay. Then there is depreciation and amortization, which is when the reducing value of your assets. We discussed this similar to cars, and amortization can also is just another word related to loans when they go in less in value. Then there are bad debts or write-offs. These type of transactions, when the value of the debt goes down or totally removed. We got this example of the friend that didn't pay the $1,000, or maybe he would pay less. And finally, owner non-cash contribution. You are the owner of your business. Maybe you want to give them a car. You have your own extra car at home. It's the old car. You'll just give it now to the business so they can use it. Here is a cheat sheet for you. Maybe if you are studying and want some, something to check your debit and credits, you can take a screenshot of it. I will not go into much details in this. And finally, also, when it comes to software, it's actually simple in real life. All you would do is you would select the transaction and you will say that this sale was on credit and not cash. The system will automatically go through the chart of accounts and it will reflect in your bills.